Good morning. It is February 21st. It's 3:30 a.m. New York Eastern Time, and about a half hour pre-market begins. And before it begins, I want to bring to your attention a sector that is going to do well. It's set to do well. It's already showing signs that it is very healthy. It's doing well. But at the same time, there has to be a balance in this whole sector, which is the bank sector, what we'll talk about, and how we should be a little careful about going forward. You can make a lot of money off bank stocks right now, believe it or not. People might not have thought about it, but yes, with higher interest rates, you can make money on bank stocks. I'll show you. All right, the first stock we're going to talk about is HSBC Holdings PLC. HSBC is the ticker symbol. It's at 37.34. It closed the after hours on February 17, 2023 at 37.29. But I think today it will go higher, in my opinion. I mean, technically it should. Let's look at some news that came out about this stock. So published on Monday, February 20th, HSBC reports fourth quarter pre-tax profit of $5.2 billion, beating estimates. So, if you're new to investing, you would think, well, with a looming recession fears and all that, how in the world are bank stocks doing well? From higher interest rates, banks, tend to gain. They can gain from that. So in this environment that we are in now, bank stocks can gain, but we also have to be careful. There has to be a balance, and I'll explain that in a little bit. So HSBC's reported profit before tax for the 3 months ended December was $5.2 billion. The bank said its fourth quarter results reflect strong reported revenue growth and lower reporting operating expenses. This was on MSNBC's website, by the way. HSBC, Europe's largest bank by assets, said higher global interest rates support the firm's confidence in achieving its target for at least 12% return on average, right? So that's very bullish. 12% return on average is extremely bullish. That's a favorable return on average for an investor. And also on Reuters, Q4 pre-tax profit, $5.2 billion. And here's a second bank stock I want to talk about is NWG is the ticker symbol. It's the company's called NatWest Group PLC. This is a screenshot of me from a video that I did. So I just took a screenshot of that video. That video is public and you can watch it if you want to. The video was made 2 months ago. So 2 months ago, the title of the video is A Great Swing Trade or Long-Term Trade, I said. And I talked about NatWest Group PLC, NWG, $6.41. First talked about it for my Discord. If you want to join, the link will be in the comment section below. And 2 months ago, I said that bank stocks would gain from this environment going forward. And so far, 2 months later, they have. First National Bank, ticker symbol FNB. I talked about that on my Discord plenty of times. We swing traded that like 2 or 3 times. Although, to be honest, now I regret swing trading it. I should have held it because it now is higher. I first talked about on my Discord for FNB, ticker symbol FNB, when it was $11. Sold it at 13. Now it's at 14 plus. So that bank stock, First National Bank, went from 11 when I first talked about it to today being at $14 and probably going to 15. NatWest Group PLC, I talked about it when it was $6.41. Well, today, NatWest 2 months later is at $7.24. I'm sorry. So after hours at $7.24. That's not a bad gain. That's a really good gain. I know some people are more focused on penny stocks and trying to go to the moon with some short, small penny stock. That's fine. I wish everyone the best, but I like this stuff. It's more easier to predict. It's safer, and if it doesn't work out for a week or two, you're not stressed out. It's a great company. You're not gonna lose your money.
Are you looking for a Discord platform that offers a first-class trading community? That's what you can expect when you join Bull Market Watch. Trading can be challenging for some people, but we're here to simplify the process for you. We have a very powerful track record. Our Discord deals with day trades, swing trades, and long-term trades. Hundreds of traders operate through our Discord, where we come up with stocks to trade for profits on the NASDAQ and NYSE. With a low monthly subscription of $9.90, you will have full access to our Discord, where you can interact with other traders and get all the latest news when it comes to trading as well. It's a community that is extremely supportive of one another and always willing to help each other out. Become a member of Bull Market Watch today and be on your way to a better financial situation.
Generally speaking, in my opinion, of course, doesn't mean it's guaranteed, but so NatWest is up also, F&B is up, now HSBC. So that's three bank stocks I just talked to you about that have gone up in the past, in this environment. And going forward, bank stocks will continue to do well. But one thing that we must notice, all right, first of all, I put this for you here. I want you, if you want to read it or screenshot this. So it says, banks can benefit from higher interest rates in certain ways. When interest rates increase, banks can charge borrowers more for loans and other financial products, which will increase the bank's profitability. And so far, the past 2 months, we are seeing that. NatWest, First National Bank, HSBC, all three of these banks have gone higher, right? Additionally, banks can earn more money from their investment portfolios as the interest rates on those investments increase, right? So that's what's causing the banks to do well. However, though, the balance that I was talking about earlier, it's important to note that higher interest rates can also lead to a decrease in consumer and business borrowing, which can negatively impact banks' revenue. How is that going to happen? Well, in the beginning now, this whole phase so far that we've been going to for many months, banks will be, they're doing well and they'll continue to do well. If the higher rate environment goes on longer, let's say another year or two, then things will start to turn around slowly in the negative way for banks. As people will get tired, the economy will get really tired, especially if recession comes. Then the consumers, the companies, businesses won't be borrowing so much anymore. Things will just turn the other way around. For now, banks are headed upwards, and they still have room to grow. But it's something to keep an eye on. So basically, if you had invested in a bank stock the past 6 months and you're up, I think in my opinion, it's still safe to continue to hold it and you can still go up more. But at some point, later on in the year, we'll have to see and reevaluate how much more we want to hold on to the bank stock, right? So in summary, while higher interest rates can provide some benefits to banks, they can also have negative impacts on the overall economy and banking industry. So it's important for banks to carefully monitor interest rate fluctuations, at the same time for investors to carefully monitor their investment in bank stocks. So 37.29 for HSBC. HSBC also has an annual dividend of 22 cents. And the analysts are still bullish, which I am also still bullish on the stock. I do not hold HSBC, by the way. All right, I don't hold the stock, but I do believe it's going to go higher. It's at the low they give is $30. The average is 41. And the high is $49. And with that being said, that's the bank sector overall summary and analysis that I wanted to do real quick, pre-market hours. Thank you very much for watching this video. I wish you all the best. Take care.